So today I want to talk about VIX, the volatility index, and why VIX might be the most important chart that you're not looking at, that you're not paying attention to, all right? So most oftentimes traders, they watch price, they watch volume, and they neglected a very important chart, which is the VIX, the volatility index, okay? So what is VIX and why it matters to us? Why VIX matters to us as traders. Okay, I'm going to show you why. So VIX is also known as the volatility index. All right, it measures the market's expectation of future volatility based on the S&P 500's options. All right, the key word here is the future volatility. This is key to us as traders, right? Because we're oftentimes trying to predict where the market is going. And VIX tells us that via the option pricing from the S&P 500, okay? So the keyword future, right? It's also often referred to as the fear gauge, because when the fear spikes, so does VIX, okay? So fear, this is also another important keyword that I'll need you to pay attention to, because I'm gonna deep dive into this fear a little bit more, all right? So let's look at this. Right now we're at VIX, a weekly chart, okay? And the reading right now is 16.75. So what does this mean, right? What does it mean to us? Why do we need to know what the VIX is doing right now, okay? I'm gonna show you exactly why, right? Do you still remember when I say the future movements, right? It's exactly over the next 30 days, okay? The market expects the S&P 500 to move a plus minus of about 4.83%. So let's say right now the VIX reading is 16.75. We expect the S&P 500 to either go up 4.83% or go down a 4.83%, all right? That is derived from the 16.75 annualized, okay? And it's divided by the square root of 12, right? So here's a simple calculation or a simple formula for you to understand. 16.75 divided by the square root of 12, then we derived our number for the next 30 days, okay? So now, here's the truth, right? Retail traders, they usually ignore volatility, but professional traders, they are slaves to it. The reason being, because when there's no volatility, there's definitely no opportunity for us. Because the algorithm will be working, right? There's no opportunity for us. And if the volatility spikes, trades become riskier, that's for sure, but potentially more rewarding. And remember what did I said about the fear gauge just now? Especially if you are a portfolio manager working in a big hedge fund, the high volatility becomes your worst enemy. Because when the VIX rises by 25%, for example, your portfolio risk around the world also rises by 25%. And this is important. Your exposure suddenly increases. You're getting the same return, right? But then your exposure gets bigger. And that's including hedge funds, the mutual funds, pensions, and everyone in the market, right? And for traders, we love volatility, but portfolio managers hate it. So I want you to imagine this, right? Imagine you're a portfolio manager, and right now you're managing a $1 million fund, okay, in your portfolio. You split it half into longs and half into shorts, buys and sells. And on a normal day, your portfolio swings about 0.35% on a normal day, which is equivalent to $3,500, right? So when the market volatility doubles, right? Let's say if the VIX goes up to 100%, that swing jumps to 7,000, right? Even not doing anything. You're not doing anything, you're not changing anything, and right now the swing doubles, which means your risk just got doubles. Although your return got doubles as well, but your risk got doubles as well. So what's the catch, right? You are now risking more without doing more. And that's why the big portfolio managers, they fear volatility, and hence it is called a fear gauge, right? It adds risk they didn't ask for. So what do the smart firms like Goldman or the smart hedge funds, they do, right? They will definitely cut their exposure by 50% because they no longer need to hold 100% because the VIX has already doubled, right? And they will need to cut their exposure, either put it to cash or just put it into work, okay? So when they put it into work, they become short-term traders, right? Day traders, short-term swing trades, right? They'll need to adapt fast. And for us, volatility equals opportunity. For fund managers, it's a headache, okay? So right now, volatility, right now you're sort of understanding how we can use VIX, right? I'm gonna go slightly deeper right now. And right now, let's look at this. This is a traffic light. We have the red light, we have the yellow light, we have the green light. Red for portfolio manager, when the VIX drops 25%, right? We'll need to switch to a portfolio manager mode because that's what the market's going to do. Because the algorithm is going to kick in, the algorithm is going to do its thing, right? And when it's amber, when the VIX is just in movement, there's nothing we can do. But when it's green, it's a green light for day trading, okay? It's a green light for short-term trading, all right? So if we look at this, when the VIX is rising, if you have a portfolio, you should reduce your positions by 50% and take a short-term day trading approach, right? Or a short-term approach. And we can look for directional setups with tight windows 1 to 5 days. But when the VIX is falling, we can increase our position sizing, we can take a portfolio building approach, and we can think in longer terms, in 1 month to even a quarter, right? And in between is basically just transition zone, so we can just stay nimble, just wait for the opportunity, right? Right? So understand this, day trading do not work most of the time due to the fact that we are competing with algorithm. Hence, the odds of success will be dramatically lower. We as traders, we join the day trading party or the short-term trading party when the volatility picks up. I hope this video gives you somewhat of an insight on how the professional traders are looking at VIX and understand why VIX is important, right? Because it affects, number one, the portfolio manager's exposure. And number two, is giving us the opportunity to profit even more in the market. I'm gonna keep doing all these videos in the coming months, in the coming weeks. So hit the like, subscribe, and I'll see you on the next one. Peace out.